Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month lead and tin. LME 3-month lead. In early June we saw a drop in prices here down to the support in dark green, currently at 1960, of the lower trend line of the oft highlighted November 2022 to May 23 broken descending wedge pattern. The upper trend line for this is actually further down in bright red, and that's currently at 1861. 14 weeks ago I said at the time about this pattern, I quote, "The optimization I've undertaken makes me suspicious about the veracity of this possible pattern, but I'd rather say it and only look a fool now than have it confirmed later on." End of quote. Thus, the descending wedge pattern has been a combination of a conundrum, a disappointment, verging on a waste of time and space, and even a bemusement since March. You see, the market exited out of this optimized descending wedge pattern back in mid-March on the upside and proceeded then to do, well, nothing. For such a long while we did not have any of the moves higher for a descending wedge pattern. What we did have was, and is, a more or less sideways movement from late March through to the middle of May, with prices capped by layered resistances and sustained by layered supports. On the top side we had resistance from the overhead 50% Fibonacci line, the March 2020 to March 2022 move at 2135. And in the past, and perhaps now again, from the very slowly declining medium moving average, currently 2100, and to a lesser extent by the slowly declining short medium moving average, currently at 2096. In more recent days, the move below the slowly rising long moving average, currently at 2094, seen in the middle of May, then in early June, below the Fibonacci and other congestion at 2058 and 2039, the 2039 is the January 2020 high, and it all started to look like the market might be trying on the downside after all. However, that drop to the green trend line in early June perversely set off a move higher in June, up through all the moving averages, and the key 50% Fibonacci line of the March 2020 to March 2022 move at 2135, only to halt at the lower trendline extension, currently 2180, of the old May to June 2021 descending triangle pattern, highlighted in purple on my daily chart. You'd think, well, this was a pretty much a nonsense level to halt at, giving consideration to its origins and how old it was. However, I urge you to look at highs in May, mid-April, late and mid and early February this year, and you will see all these highs have been around this trendline extension, despite it being broken in November last year through to January this year. You would see that this purple trendline has developed some form in recent months in capping any rise. Thus, since the middle of last week, prices have dropped back to where they were 3 weeks ago, and only a little below where the market exited the descending wedge pattern back in March. Prices are still sitting amongst the sea of moving averages that really seem not to have any direct impact on the market. Looking at the close proximity of all the moving averages at this time, they seem even more compacted than where they were last week, all condensed between 2094 and 2105, an extraordinarily narrow range. I had to go back to February 2022 to even try and see a similar narrow range. You would think, being so close together, they would somehow reinforce each other, yet the opposite seems true as they continue to move in a no man's land between support at 2058 and resistance at 2112. Hence, devoid of anything else to latch onto, the market goes straight through them. The only potential I can see is that we might well form a bow tie formation with some of the moving averages, but we'll have to wait a little yet to see that happen. Finally, two things. Firstly, we still have overshadowing all of this January's monthly key reversal down. Then secondly, we had the possibility last week of a monthly key reversal here in June. However, all that happened was that prices ended up making a lesser outside month instead. LME 3-month tin. The most obvious feature is the late October 2022 to mid-March 2023 bullish shift pitchfork, which is highlighted in dark blue on my daily chart. I drew this back at the end of April, just as we were going into May, and despite attempts lower, it still gives the main bullish angle of attack of this market. We are currently in between the lower time below, currently at 24,780, and the middle time above, currently 31,105. It's at this point I'd like to draw your attention to the moving averages. They had in recent weeks been affecting the operations, sometimes on a daily basis. I first draw your attention to long moving average below the market, currently at 24,385. You see we have a series of stratified supports that slowed and eventually halted the market's earlier attempts lower. Into these, back in late March, entered the now slowly rising long moving average to initially reinforce them, which it did admirably. But on top of that, the lower time has been traversing through these supports, and 4 weeks ago it crossed up over the long moving average, thus reinforcing the support even more. However, both the lower time and the long moving average are now exiting higher through these congestion bands of support, and thus each will individually be weaker compared to when they were reinforcing each other. Looking closer in, we've had the 2012 high at 25,875 interfering with moves higher and most recently on moves lower, assisted by the flatlining medium moving average currently at 25,520. Above this we have resistance stroke support at the lesser Fibonacci lines at 26,825 and 27,330, and between the two of them they created a horn top over the middle of June. However, even now the next real resistance is up at the July 2011 high at 29,005, and again, even then, that July 2011 high is not that strong a resistance. And you'd have to look higher still, past the lesser Fibonacci lines at 3205 and towards the middle time and the interesting 50% Fibonacci line of the March 2020 to March 2022 move at 31,845 to see something a little more heavyweight. So overall, the market continues to move upwards in between the middle time overhead, currently at 31,105, and the lower time below, currently at 24,780, of the big bullish shift pitchfork, which is still running this market. We just seem to have a lot of congestion both below and above the market.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.